Book of Ecclesiasticus, chapter 5, and verse 15. Be not ignorant of anything in any great matter or small. The book of Proverbs, chapter 14, and verse 15. The simple believeth every word, but the prudent man looketh well to his going. All praises to Yahweh, Ba'ashem Havashah, Bahara Kakwadash. Double honors to the elders and the apostles of the great millstone. Shalom to the hopeful elect of the nation of Israel. They're scattered abroad amongst the heathen, some look like the heathen, beginning with 144,000. Preachers, teaching, prophets, Shalom. Now, while people think America is bouncing back and Trump took the tariffs off and the stock market shot up a little bit, people think things are in good case, right? Hey, 1 Thessalonians 5 and 3. For when they shall push peace and safety, then shall sudden destruction cometh upon them as a woman in travail, and they shall not escape, right? So what's going on behind the scenes that mainstream media is not telling you? That's why every day is terrorists. Every day is Trump signing an executive order. It's something. It's something that we've been constantly reporting on. It's something that they've been constantly reporting on. And they're just giving the same information, just repackaged for the most part. All right? But this is what's going on, right? It says $2 trillion Fed bailout. This is breaking Fed preps for $2 trillion bailout as hedge fund trade implodes. All right? And that word implode is a bad word, man. That's a dope word right there. It's blowing up, right? It's being destroyed from the inside. Implode. Collapse or cause to collapse violently inwards. You see that? You see? So that's what's going on with this economy. All right? That's what's going on with this financial system. Okay? That's what's going on with these banks and the Fed and behind the scenes, the people that deal with the money. The dollar finished, man. They finishing it off. All right? They're really about to break down the people and bring forth cause hyperinflation because the dollar's devalued and collapse these banks. All right? And collapse these banks. All right? Now, real quick, you go to what's a bail-in? It's called a bank bail-in, but you type in a bail-in, AI overview, a bail-in in finance. This was another term that I was trying to remember the other day. A bank bail-in, when the banks can take your money to pay off their debts. Yes, take your money and pay off their debts. A bail-in in finance refers to a mechanism where a bank facing financial difficulties, instead of receiving a bailout from taxpayers, forces its creditors, like bondholders, to absorb losses by converting their debt into equity or writing it down, effectively shifting the burden of the bank's problems to its creditors. Here's a more detailed explanation. What is it? A bail-in is a financial tool used to address a bank's insolvency or near insolvency where the bank's creditors, rather than taxpayers, are asked to cover the losses. How it works: instead of a government bailout, the bank's creditors, like bondholders, have their debt converted into equity or written down to reduce the bank's liabilities and increase its capital. It says why it's used. And bail-ins are intended to avoid taxpayer-funded bailouts and to ensure that the financial burden of a bank's failure is borne by those who benefited from bank's operations rather than the general public. Bank bail-in. A bank bail-in involves a failing bank's creditors, including depositors, shareholders, and bondholders, absorbing losses to recapitalize the bank, rather than taxpayers funding a bailout seen in 2008 financial crisis. Um, a bail-in, a bank facing financial difficulties converts its debt, including deposits, bonds, etc., into equity shares to increase its capital and avoid collapse. Dodd-Frank Act and bail-ins. The Dodd-Frank Act passed in 2010 established the legal framework for bail-ins in the U.S., giving the Federal Deposit Insurance Corporation (FDIC) the authority to convert a failing bank's debts into equity. Purpose: bail-ins aim to prevent government bailouts by shifting the burden of rescuing a failing bank to its creditors and shareholders rather than taxpayers. So you see who will be the ones paying for it? The people. They'll take your money. All right? So you see, this is a deeper breakdown than the first one. It says how it works. The bank's losses are first absorbed by its shareholders, those who own the bank stock. If the shareholders' investment isn't enough to cover the losses, the bank's creditors, those who lent money to the bank, are then required to absorb the remaining losses. This can involve converting debt into equity or writing down the value of the debt. FDIC insurance. In the U.S., the FDIC insures deposits up to $250,000 per account, meaning that in a bail-in, only deposits exceeding this amount are at risk of being converted into equity. Meaning they could take what's over $250,000, but that's a lie. What you see these banks like Bank of America doing? Hey, they pausing and freezing accounts, closing accounts, and taking people's money. This is what they're doing, and this is what's going to happen. And that's prophecy, man. All right? So this is what's going on behind the scenes. But you know that Second Edge 6 and 22, we're going to get it. It says, examples, the Bank of Cyprus used a bail-in to resolve the banking crisis in Cyprus in 2013, where unsecured deposits larger than 100,000 euros were converted to equity. Potential risk: loss of creditor funds. Creditors could lose a significant portion or all of their investment in the bank. Increased risk perception. Bail-ins could lead to increased risk perception among investors, potentially causing a run on the bank and further instability. And that's the people, man. All right? So, Second Esdras 6 and 22. And suddenly shall the sown places appear unsown, and the full storehouse shall suddenly be found empty. And we went into this the other day, how it also applies to banks. So our forefather Ezra didn't just see empty stores, he saw banks being closed down. People not having access to their reserves, their funding, their banks. And we've seen examples of that over the past over the past 5 years, really since the demic, especially back east. How China and India, they were trying to get a hold of their money, but the banks were closed and they couldn't get access to their money. Accounts are being closed, and we've been seeing that a lot with Bank of America. All right, and more banks are starting to do this, which shows you the state of America and this economy and this money system, man, and the banks. Okay, and what's about to happen? All right, and suddenly shall the sown places appear unsown, and the full storehouse shall suddenly be found empty, and the trumpet shall give a sound which, when every man heareth, they shall suddenly be afraid. Right? So, hey, when people hear that the banks are closed, you can't get your money, hey, man, these people are going to, man, go crazy. All right? Hey, this lets you know what time we in, man. All right? The state of the dollar. It's the value. It's finished. All right? So this what's going on behind the scenes while people thinking America is bouncing back because Trump took the tariffs off, but still raising 125% with China. Majority of the things over here in America, it comes from China. And we went into that yesterday by way of the Holy Spirit. At that time shall friends fight one against another like enemies, and the earth shall stand in fear, but those that dwell therein, the springs of the fountain shall stand still, and in 3 hours they shall not run. So this would be straight up chaos. All right? So this is what's going on. All right? Now let's play this. The video is 13 minutes long. I'm going to play pretty much all of it, but I'll put the link in the description box. This is ITM Trading. All right?
Machine learning is advancing, but businesses wonder if some machines can keep up. Let's welcome our new coworker. Of taking it public.
Her name is Tiffany Taylor, if I'm not mistaken, her fine ass. It says breaking. Fed preps $2 trillion bailout as hedge fund trade implodes. Now, real quick. What's the purpose of a bailout? A bailout's purpose is to provide financial assistance to a struggling entity like a company or bank to prevent is not America a company, a corporation, to prevent its collapse, often to protect the national economy from the potential consequences of its failure, such as job losses or a lack of investor confidence. And what we've been, the stock market crashed the other day. All right, Friday. Then it dropped down like another 1,700 points on Monday. It was looking bad. Then Trump did what he did yesterday and took the tariffs off, and it kind of shot up a little bit. But it did crash, but soon we can see it completely crash. All right? And we see these things right here going on right now. And it's constantly increasing. All right? So the information is on point. As a matter of fact, watch this stock market crash, or what identifies. It says a stock market crash is a sudden and significant decline in the value of a market, often characterized by a sharp drop in stock prices, typically following a period in rising prices, a bull market. Right, bull market is when everything is doing good, right? So we're no longer in America's no longer in a bull market, but a bear market. Okay, a bear market is when everything is on a decline. All right, it says here's a more detailed explanation. Definition: a stock market crash is a rapid and substantial decrease in the overall value of stocks, usually seen as a sharp downturn from a bull bank. Causes: crashes can be triggered by various factors, including economic crisis, major events, overvaluation of assets, or investor panic. Examples: notable U.S. stock market crashes include the 1929 crash, which led to the Great Depression, and Black Monday in 1987. Impact: crashes can have significant economic consequences, potentially leading to a prolonged bear market, economic trouble, and loss of equity, investment values. Measures to prevent crashes. Well, we don't got to read that. Let's just hit bear market. It says, matter of fact, we'll read it. I mean, it's gonna happen. Okay. Some measures to prevent stock market crashes include circuit breakers, trading curves, and large entities purchasing massive quantities of stocks. Hey, it's nothing but uncertainty now. All right. So people are not taking chances like that anymore. Bear market. A bear market is a prolonged period of declining stock prices, often following a crash where the stock market loses 20% of its value in 52 weeks. Recessions and crashes. While not all stock market declines lead to recession, some recessions are preceded by or accompanied by stock market crashes. So you see, this place is finished. It's finished. All right. And what was the term we were just looking at? Bailout. What were we just looking at? Bailout. Damn, what was the term we were just looking at, man? Damn, I knew I should have kept. A bank bailout involves government or other entities providing financial assistance to a struggling bank to prevent its collapse, often through capital injections or loans to stabilize the financial system and prevent broad economic damage. So again, you see the state of America and what's going on. This place is on a downfall, man. This place is finished. All right? Finished. What's a bank bailout? A bank bailout is a form of financial assistance provided to a bank that is facing financial difficulties, potentially leading to collapse. So you see how these banks are going to collapse? You see how these banks are going to take your money? As we read in, these banks are going to take your money and close down, and you will not have access to it. As we read in 2nd Ezra 6. And people are going to go nuts. Going to go crazy. The power going to go out soon. All right? It's going to be chaotic. This is what's going on. This is what's about to happen very soon. All right? Soon doesn't mean tomorrow, next week. All right? It says, why do bailouts happen? Bailouts are typically implemented to prevent a bank's failure, which could trigger a financial crisis and broad economic instability. How do bailouts work? Bailouts can take various forms, including capital injections. The government directly invests money into the bank to decrease its capital base. Loans, the government provides loans to banks to help it meet its financial obligations. And people can't pay back these loans, man. Guarantees, the government guarantees the bank's debts, making it easier for the bank to borrow money. And just think about it. You say, hold on, all your money in there. But see, your money is not really in there. They take your money and they invest your money. So if you got $200,000, let's say you got $50,000, $40,000 in there, and you want to take it all out. You can't take it all out at one time. They can go to their bank branch manager. They go to their manager, then they can go to the branch manager, regional manager, whatever, and they can try to get it approved. And they can say, no, we can't give you all of it. We might could give you $10,000 a day, $20,000 a day. You got to come back another day and get it piece by piece. Why? Because they don't keep all that money at the bank, man. All right? Your money is just in there on a computer system. It's just a bunch of numbers punched. Because that money got to spread out through what? About a week or something like that? Might be a little longer. So you see, hey, these bank runs are going to really start happening. And they can be like, hold on, we got to shut this shit down. And soon people not going to be able to get their money. All right? So these banks going to shut down. This whole corporation, this America, the Fed, all that joint is going to shut down. The economy is going to shut down soon, man. All right? This place is finished. But let's just go ahead and get it. You know, we always get it. You know? Zephaniah. And we'll play 10 minutes of this video. Zephaniah 1 and 10. And it shall come to pass in that day, said the Lord Yahweh Shema Shah, that there shall be the noise of a cry from the fish gate and a great crashing and a great howling from the second, and a great crashing from the hills. Howl, ye inhabitants of Mektesh, for all the merchant people are cut down, and all that bear silver are cut off. All right? Now, you got these so-called specialist analysts are trying to say that the stock market does not represent the economy. Man, you lost your damn mind. It represents the economy. This place is finished, and it's gonna crash completely. See, all this is a part of the Great Reset. All right, to bring forth the chaos so they could come through with the order. We just read it in 2nd Ezra 6. All right. Now, if you're waiting for new scriptures to come out concerning prophecy, it's not gonna happen, man. These are updates. All right, constant updates to keep the hopeful elect who are seeking to be the elect of Israel who serve Yahweh Shema Shah. This is for us as a hopeful elect to stay intact, man. Okay, so we won't be caught off guard. All right, so if you're tired of the same reports, hey man, hey, go do something else with your life, man. All right, I mean, shit, it's over with anyway. But for the hopeful elect, hey, we know what it is, man. Keep grinding, keep holding on, because this stuff's playing out, man. All right? Now, these type of reports, things like that are behind the scene. That's why we got to constantly do the research and pay attention. Because while they're always focusing on the things on mainstream media, hey, which a lot of those things are distractions, you always got to consider and wonder what's going on behind the scenes. All right? As we always bring out through the spirit and power of Yahweh Shema Shah. Now, this what's going on, man. This how you know America is, hey, they're about to bring forth this reset. Hey, Trump just signed the executive order concerning these coal plants. How, hey, they got more leeway. Hey, like we put up the video the other day, through the spirit and power of Yahweh Shema Shah, how they're going to have these coal facilities in these, 21 states. They're going to have more access to more coal and be able to burn more coal. Like Trump said, hey, it takes twice as much coal to run this AI digital system, man. We literally put the video up the other day. He said it. So they letting you know what's about to happen. All right? I'm gonna let this woman right here tell her talk. I'll find that. I claim her every time. Yeah, if she's an Edomite, she ain't gonna be saved. But hey, a woman that come back in the kingdom look just like her and has mine.
The Federal Reserve is quietly preparing a multi-trillion-dollar bailout, and it's all because one of Wall Street's riskiest hedge fund trades is imploding fast. While stock markets whipsaw and trade war tensions with China escalate, a much bigger crisis is brewing just underneath the surface in the bond market. But this isn't just a problem for Wall Street. Hedge funds are blowing up, liquidity is vanishing, and the Fed is eyeing a multi-trillion-dollar injection just to stop the bleeding. But if this spiral continues, we could see mortgage rates rise, retirement counts disappear, and even bank bail-ins threatening you and your financial security.
Are we not seeing these things already? I just wanted to say that.
So how did the safest asset in the world, U.S. Treasuries, become the epicenter of systemic risk? What does this fallout mean for you and your financial future? And most importantly, how can you use this knowledge to protect yourself before it's too late? Let's get into it. In case you missed it, last week I reported on a massive vulnerability in the U.S. Treasury market that almost no one is watching, the hedge fund basis trade. Now, it sounds boring, safe almost, to exploit tiny price differences between U.S. Treasuries and futures. But here's the problem. They're doing it with massive amounts of borrowed funds. We're talking 10-to-1 leverage or more. These hedge funds, they're betting hundreds of billions on what should be tiny, stable spreads. In fact, these hedge funds now hold roughly $1 trillion of U.S. Treasury securities, meaning that they account for 11% of the entire market alone. So if they're forced to unwind, the exposure could balloon upwards of $8 trillion. Now, typically, when the stock market plunges, we see money flood into bonds as a safe bet. But this past week, we've been seeing the opposite, a bond market sell-off, causing a lot of volatility. And for these highly leveraged funds, any small shift is dangerous, but this kind of volatility is deadly. So who is selling and causing all of this? Well, this is where the plot thickens. See, as trade war tensions with China grow, it is the lenders behind the hedge funds, these large financial institutions, who are getting spooked about being paid back, so they are pulling liquidity from the hedge funds. They are saying, no more, we're not going to roll over these loans, and they're issuing margin calls, essentially demanding that the hedge funds put up more collateral. And as you can guess, these over-leveraged hedge funds, they just don't have it. So what are these hedge funds doing? They're initiating their own doom loop. They're scrambling to raise cash by selling off the only asset they have left, U.S. Treasuries. Yes, that's right. The safest asset in the world, U.S. Treasuries, is being dumped en masse by hedge funds. But this wave of forced selling, well, it's creating something we have seen before: systemic risk. The same phrase that prompted the 2008 bank bailouts, except this time, it's not banks, it's hedge funds. And this time, instead of $700 billion, we could be staring down a multi-trillion-dollar bailout. Don't believe me or don't think it's going to happen? I'll prove why it's not only possible, but very likely. First, 2 weeks ago, before Treasury yields spiked, financial experts and insiders were already urging the Fed to create a hedge fund bailout tool, meaning this crisis wasn't a surprise, it was anticipated, and in their minds, they already have the answer, the solution: a bailout. Second, this already happened in 2020 when margin calls hit Treasury futures. The same thing that's happening right now. What happened? The Fed stepped in and pledged trillions. We already know how this plays out. Third, if you want hard proof that something is breaking right now, that it's not just temporary volatility, all you have to do is look at the SOFR spread, the secured overnight financing rate, a key indicator in measuring bond market stress. When it drops, it means banks are panicking, liquidity is drying up, and we are in trouble. Let's look at it together. You can see right here that spread drops to a record low, meaning that the system is seizing up. In simple terms, money is not flowing. Institutions are dumping even high-quality assets just to raise cash. This chart alone shows us that this system is screaming things are not okay. But here's the scariest part. The unwind has only just begun, and the Fed, they're cornered. Either way, we lose. If they choose to bail out hedge funds, well, we already know how that plays out. Inflation will skyrocket, and it will be you and I who pay, while those who were reckless with their debt will walk away untouched. But if the Fed waits too long, it puts the entire Treasury market at risk. The Treasury market, which is the underpinning of the global financial system. It would make what happened this past week in the stock market look like nothing. We could expect to see a serious crash. 401ks, retirement plans, IRAs, all that are tied up and rely heavily on bonds, those would all be seriously impacted. We could see credit freeze, businesses fail, and of course inflation leading to hyperinflation, meaning the cost of everyday living would go through the roof. And yet, that's not even the worst part, because there is one more consequence of this that could change our lives forever. Now,
You hear what she said? So, hey, and she knows what she's talking about, man. Her and, what's the other lady I listen to? The older lady with the gray hair with the glasses. I think her name Barbara. I forget her name, but, hey, they on point, man. All right, all you got to do is a little research. So these things are happening.
zoom out with me
And it's coming.
for a second and look at the United States on a global level. It's no secret that for years, nations have been reducing their reliance on the dollar and moving away from dollar reserves. I talk about this all of the time, but now something has changed. Instead of slowly reducing their holdings or slowly buying less, it's almost as if these nations have been given a green light to stop buying U.S. Treasuries, that maybe, just maybe, there are safer options out there, and for once, they don't have to fear retaliation from the United States. And stay with me on this one because it ties directly to U.S. banks and your savings. Now, the U.S. government, they sell U.S. Treasuries at auction to finance the debt. Debt that, as we all know, is costing us over $1 trillion annually just on the interest. But what happens when demand for that debt drops. The government has to raise rates to attract new buyers, making the debt even more unsustainable. And that's exactly what just happened. This week, a U.S. Treasury auction saw shockingly weak demand from investors. But when foreign buyers don't step up, guess who is forced to? U.S. banks. This week, U.S. banks bought a whopping 20.7% of total auctioned debt, meaning two things. Number one, global confidence in the United States and the U.S. dollar is weakening. Number two, U.S. banks are now forced to hold all of this unwanted risk. But here's where it gets personal. When banks are forced to buy up all of these treasury bonds, well, what happens when the value drops or volatility increases? Now these banks are sitting on massive unrealized losses, something we've already seen that we cannot afford to get worse. These are the same institutions that are supposed to be protecting our deposits. And under the current rules, it's not the government who's going to be forced to save these banks anymore. No, it's you. Under Frank Dodd, it's you and me and everyday Americans whose finances can be used to plug this hole. Ask yourself if Treasury demand...
Right, in other words, they can take the money, they can take your money out the bank. All right, whatever you got in there, they're going to take it. All right? That's second Ezra 6 and 22. All right? Shit, you can't pay your debt now. Everybody behind. So, hey, your money come to the bank. The time coming when these banks gonna hold everybody's money and shut the banks down, and your money gonna be gone. And you know what they're gonna come through with? That digital system, the MOTB, that mark of the beast, that Revelation 13, 16, and 17. That's what that second Ezra 6 and 22 is going into and what it's gonna lead to.
Keeps collapsing and banks are forced to keep buying. How safe are your funds in your bank really? And before someone out there says, oh, bank balance, that will never happen, it has happened in Lebanon, Cyprus, Greece, and before someone else says, okay, but that's not the United States, it actually has happened here in the United States. A couple of months ago, a failed Oklahoma bank, First National Bank of Lindsay, they weren't bailed out, they weren't bought out. No, anyone in there who had over $250,000, all of the uninsured deposits were taken to make the bank whole again. Now, I had never heard of this until one of our viewers, Pat, wrote in to tell me about it because I'm guessing they didn't want it to make national news. But make no mistake, you can sit there and say, well, they shouldn't have had more than the insured amount. But there is a reason that they made sure everyone knew that with Silicon Valley Bank, all of the depositors were made whole again. They don't want anyone questioning if your cash is safe in banks. And I'm not sitting here proposing a bank run, but I am saying this was just the tip of the iceberg. If you think that even the up to $250,000 will be safe, think again. We've seen how bank bail-ins play out in other countries. We know that accounts can be frozen for years. And what happens during that time period? They devalue or revalue the currency, meaning not only can you not access your funds, but whatever you had in there is worth tremendously less by the time you even get access. And that's depending on how much they let you have. And if you still don't believe me, you can hear it straight from the FDIC, the Federal Deposit Insurance Corporation themselves. In one of their meetings, they laughed at the American people for not knowing about what bail-ins were and think it's better that way because they don't want people scared.
I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do.
These are the people who make sure your deposits are safe. Let's call it what it is. The government offloads their debt onto banks. Banks then carry the risk, and burdened by the debt with all of these losses, you become the backstop. But while all of this is scary, and I hate to be the one to sit here and tell you about it all, there is one piece of good news, which is that you still have time.
Unless you got to start going into gold now. But even gold ain't gonna say you. Because the MOTB is gonna be a digital system. Alright? So you're not gonna be able to buy or sell unless you got the MOTB. It didn't say you can buy or sell unless you got the MOTB and or gold and silver. Right? But hey.
Though all of this is happening quickly, we are still in the early stages of this hedge fund wind down.
And this place is finished, man. But yeah, I just wanted to hit this real quick through the spirit and power how about Shamal. Sure, I'll put the link to her to this video, and you can subscribe to ITM Trading Inc. Man. Shalom.